So welcome to quarter two compliance call. Here's the lovely disclosure that we have to have at the beginning of each meeting. So this one has quite a bit of stuff in it, so I'm not going to read everything. The slides are pretty busy, but I do that so you guys can easily read them and access information when I send this out after it's approved with Cambridge. So we've got quite a stuff we're going to cover today. And plus, it also tells you where to look for it if you're looking for something specific. I put these in order of the page that it's on the slide to make it a little easier too, so to locate stuff. So first, I wanted to start off with attempted fraud and client risk. So this, unfortunately, has become a bigger problem in more recent years, so much so that the FINRA Annual Regulatory Oversight Report included examples of external fraud schemes that are targeting investors directly. So here are some of the examples of the trends that they're seeing. Disaster-related scams, investment club scams, gold bar courier scams, crypto confidence frauds, mail theft-related check frauds. So they provided some guidance. Firms may consider incorporating some of these following effective practices into your risk-based compliance programs to help detect and mitigate the threat posed by external fraud. So here's some of the information and some of the pointers. So I'm just going to kind of go over a couple of these, highlight a couple. So information that you can provide educational materials to associated persons and customers explaining how scams occur and providing sources for victimized customers. So, and all these that you see that have lines under them are hyperlinks, so you can click on them and it'll take you directly to the source. I make sure that those all work. So that's one option. Establishing effective communication channels to make sure if you quickly can detect something to see if something. So if someone calls in to your office, in fact, this actually happened in our office to one of our advisors. Client called in, wanted to liquidate her whole account. Come to find out, someone called her, told her she needed to get all her funds out of her investment account and out of her checking account. They already got her checking account money, but luckily the advisor stepped in, was able to realize that she was being scammed. So, but having a plan in place, if you have assistance, an example, if someone calls in and says something crazy like that, having them say, hey, no, they need to talk to you, or they need to make sure you're aware if there's anything that might be suspicious, making sure that you get involved and that stuff's not getting, transactions aren't happening on clients' accounts that shouldn't because they're getting scammed. There's some rules in here too that have links as well. Another thing is if you think a client has been scammed or you know that they have been scammed, you want to make sure you reach out to Cambridge. They can place a temporary hold on the client's accounts to make sure until everything is checked to make sure that their account is safe. Emphasizing the importance of a trusted contact. So especially with older clients or clients who may be of concern, who might be easily convinced to give information to someone they shouldn't. I'm really trying to get those trusted contacts persons on there because then you can loop them in to help assist with that situation. FINRA security helpline for assistance. So they have a helpline to assist on that. And then here's some developing response plans for situations that help firms identify that a customer has been victimized. Also, in addition to for all elder and vulnerable adults, they're saying notify adult protective services, but Cambridge also has a form and a page to let Cambridge know. So if you do have that, obviously reach out to me. I can get you connected to the right resources through Cambridge. But I also wanted to make sure you knew that FINRA has a lot of great helpful stuff out there too to help clients and help educate clients. And then additionally, here's more guidance concerning external fraud identification, mitigation, and prevention. So as you can see, this is a big thing, a big deal. FINRA is doing what they can to help educate us and then in turn help you educate your clients. So again, all of these lined are hyperlinks to help provide information that you may need information on. So this is a really big deal right now. We're seeing it happen not only in our own office. When my husband worked at the credit union, he saw it happening there quite often. It seemed like once a week someone was coming in for fraud. All right, so next, fixed index annuities licensing policy update. So just wanted to make sure you all aware, those of you who do sell fixed index annuities, that the policy has been updated to remove the requirement for a securities license 6 and 7 and state registrations to sell and be compensated. Of course, existing requirements related to those and, making sure you're properly insurance licensed and the use of the approved MGA, those are still in effect. Speaking of proper insurance licensing, it is really hard or close to impossible. So Cambridge does not have the ability to currently check anybody's state insurance license, whether you're licensed in their state or not. And in return, it's hard for us to also verify that. So I reached out to the insurance center and they provided some guidance for how you as the FP can verify. So you can pull the information once every 12 months for free through NIPR. There's the link there. There's also an article walkthrough to help pull the reports. And then the person I spoke to also recommended that NEFP, you can download the NIPR app. It's free. You can review your license information anytime. And it's called the NIPR Mobile. The main reason this is so important is I got a phone call for Cambridge that an annuity was approved and the advisors were not insurance licensed in that state. It was a pretty high commission, and the FPs would have missed out on that commission if it wasn't for the annuity company catching that they weren't licensed and they canceled the transaction, thankfully. In this case, that's a good thing that it was caught. They got licensed in that state, had the paperwork all re-signed and resubmitted it. So if you submit paperwork and you are not insurance licensed in that state, even if the insurance company doesn't catch it, Cambridge will catch it and you will not get paid for that and you will not get retro paid for that. So please make sure you're insurance licensed in a state before you do any annuity business. So FINRA gift limit amendment. So recently they amended the retail limit from $100 to $1,000. So they also upped the annual gift limit to $300 for employees of clients or prospective clients in relation to employer or business relationships. So I just wanted to make sure you were all aware of this. Of course, this is separate and does not affect the $1,000 per retail client per limit each year. This is just some more information on it, explaining it. Again, with sponsor company gifts and reimbursement, there's a little blurb on that. It's just letting you know what's considered qualified expenses and such. And then the hyperlink, the pink hyperlink, permissible compensation and reimbursements. So if you're wanting to do something and you have a sponsor, a wholesaler's offering to pay for stuff, this helps guide you on what can be and cannot be approved. It also requires pre-approval first with compliance. So you want to make sure that you get anything pre-approved first so you do get reimbursed for anything you do with sponsor companies. There are exceptions as far as gifts to clients. Special occasions, so for example, a major life event, so there are exceptions to certain things. So I wanted to just make sure I put that blurb on there for you guys as well. Retail client gifts, again, a reminder that you can still give up to $1,000 in gifts per year to each retail client. Cash is not allowed, but gift cards are acceptable. I've been asked this a couple times, so I wanted to break this part down. So retail clients are people and trustees, individuals. So for joint accounts, the gift is $1,000 unless each person has their own account. So it's $1,000 per person. But if, say, for example, you have a couple that only has a joint account and that's it, it's $1,000 total. But if they have that joint account and then say the wife has a Roth with you, then it's $1,000 for the wife and then $1,000 for the joint account. So I wanted to clarify that on you. Again, no gifts. Oh, you cannot ask clients for gifts. No gifts are allowed in return for referrals or testimonials, and gifts that must be paid back are considered loans and are not allowed. This next section is something I get asked about now and then. Small items like your promotional items like pins, mugs, stuff like that, stuff with your firm logo on it, that's not considered part of the gifts and it does not need to be disclosed in the gift log. Now, if it's a more expensive gift, obviously it would. If you're not sure, just reach out to me and I'm happy to discuss that with you if it needs to be disclosed or not. But little stuff like pins, mugs, if you're giving out t-shirts and they're not, like the way I look at it and the general rule of thumb, $25 or less, don't even worry about it. If you're getting more to $50 or more, just reach out and we could talk about it and see if it should be disclosed or not. And then keeping track of gifts, all gifts given and received, except for the de minimis items, they must be recorded in the gift log. The gift log is in Reg Ed. And it also gives some guidance here that it's valued at what they cost, not including tax or delivery. So if you're sending a client flowers, they had a wedding or a sad occasion, someone passed away. The flower arrangement was $100, but then the tax was $15, and then shipping was $50. You only log the $100, not the tax and the delivery. You accepting gifts as FPs, you can accept reasonable gifts up to $500. Apparently a client tried to give their advisor a red Mustang convertible. Obviously, that would not be allowed. So just keep that in mind that you can get gifts, but again, they do need to be logged. And if it's over $500, I don't know anyone who has clients like that, but if you do, just wanted to make you aware. So here's an update that's coming. I have no idea when. They just let us know. So I wanted to make sure you all know because several of you have expressed that you would like this feature. So click workstation. So coming soon. Soon is relative. Don't know if it's this year or not. Hopefully it is. But they are currently working on alerts and notification for trade review and click workstation. So when you log in and click workstation, it will have a little bell at the top to alert you that you have an outstanding trade warning or an outstanding item in trade review for a new account. So I thought you would all be happy to hear that, and I wanted to let you know, but that's the only information I have. No idea on the timeline. Hopefully it's this year, but in any case, it's in the pipeline. They are aware that FPs want this. So now I'm going to go over some more FINRA stuff because with the end of the year and been on a lot of calls, training calls for FINRA stuff. I just want to make you guys all aware of some stuff that were issues, stuff that's on their radar for this year and going forward. Not that any of the stuff is necessarily an issue for any of our offices, but I like to keep you guys aware and let you know what's going on. So these were top issues for 2025: anti-money laundering, misleading, inaccurate, or unbalanced communications. So in that case, it was, say, an advisor posted on their LinkedIn page, "We guarantee you will get this back. We guarantee all our people." So putting stuff that isn't fair or not listing risk for something, saying something there's no risk, stuff like that. Trade reporting. Of course, we have Cambridge with trade warning, so we have a good backup plan for that. Record keeping. So very important, making sure that you're documenting your interactions with your clients, you're documenting any recommendations, and even if you don't have a CRM, the client file, however you keep track of it, just making sure you have good record keeping practices. Regulation, best interest. So the issues were noted for this as well, that there was not reasonable basis, or there was not good documentation for the product or strategy. And form CRS not being delivered. So as we're doing reviews, we are talking about some of these items, supervisor reviews. We're letting you guys know, but making sure that I know most of you do upload the form CRS if you do DocuSign with the new account paperwork, which is great. But just making sure you're delivering those forms to your clients and somehow documenting it or proving that you're doing it. You don't actually have to show that you're doing it. You just have to document and show that you need to document that you're doing it. You don't necessarily have to show proof that you're doing it. 2026 significant cases. So here's a couple items that they're really focused on and what they've seen so far this year in the first half of the year. Again, anti-money laundering is still a big thing. Off-channel communications is still on their radar. So, which we've talked about this, and Cambridge has addressed this. If a client texts you on your personal cell number, if it's securities related, forwarding that to your email, your work email, and then forwarding that email to Cambridge so it is archived, not responding back to them on that. And if you have either my rep chat or Hearsay Yext, responding back on that or responding back in an email or calling them back. UTMA accounts. So FINRA has been looking at firms who have UTMA accounts that the minor is now of age and it's still sitting in an UTMA account. I know quite a few of you who have UTMA accounts have had multiple cases opened up for these to get these switched. So please make this a priority because this is on FINRA's radar, which is why it's a part of its own reason it's on Cambridge's radar to work on getting those switched over from the UTMA accounts to a regular account. 2026 oversight. So here's some things that they're looking at still. Record keeping is still the foundation, which I mentioned earlier. Off-channel communications still remain high risk. Supervision under a microscope. So not only not only are they looking at FP offices, but they're looking at how they're supervised and they're going after supervisors for not properly supervising. So that is also something that has been on, that they've been watching. And of course, AI is the new variable. Jen and I get on a lot of calls to try to keep up to date with what FINRA and SEC are looking at in regard to AI, and there's still no clear-cut answer. Thankfully, Cambridge has been on top of this and has provided a lot of good options and a lot of things to help. But yeah, so we're still monitoring it, and we will have to keep up with it just like everyone else with the changes. So each year, FINRA publishes its annual regulatory oversight report. There's a letter. So, and at the very bottom of this page where it says here, that's the hyperlink to the letter if you want to see it. FINRA urges firms to enhance the firm's compliance, supervision, and risk management practices. So here's their top exam priorities for 2026. So I just wanted to go over these. And I've already mentioned most of these, but Reg BI and Form CRS, senior investors and trusted contact persons. Again, we talked about that because of the fraud, communications with the public, outside business activities and private securities transactions. Outside business activities need to be disclosed within a timely manner. Private securities transactions obviously need pre-approval before you interact in one. Books and records, Gen AI, anti-money laundering, cybersecurity and cyber-enabled fraud, crypto assets, private placements and annuities, consolidated audit trails, best execution, order routing, and fair pricing. Of course, trade review, trade warnings help monitor that. Extended trade hours, and then they had some additional areas of focus as well. So something new that has come up. I received a phone call from our regional director about trade warnings, approving trade warnings with, this is mainly for the alt and complex ones, for concentration limits. So I was told that I cannot just approve these if they're over a certain limit, that I need to escalate them to Cambridge for final approval. So I just wanted to let you all aware of that. So when you get a trade warning and I ask these questions, that is, and it has changed, it's new. So that's just wanted to clarify that. So the two things that the regional director told me is reach out to the FP and make sure that you verify that the risk tolerance is correct in click and the net investable assets are accurate in click as well. Because obviously these triggers are based on those two. And of course, net investable assets change. Typically, they're going up if someone is still working. Risk tolerance can change, obviously, too. And so just making sure that those are up to date. And then if they are correct, if it's like I mentioned, if it's above a certain limit, I can approve it at my level, but then I have to escalate it to Cambridge for final approval. So I just wanted to let you all aware for those of you who get these. Trade warnings, all of them are auto-generated. I do not have any control over them, that they come to us. Cambridge's rule, if you get a trade warning, it needs to have a response from the FP before I approve it. So yeah, and I know they're a hassle. None of us like them, but as you saw in the previous slides, there's a reason why we have this extra protection in place to make sure everything is supervised correctly, everything is documented, and everyone is covered. Important reminder to keep Form U4 current. FINRA requires every Form U4 to be kept current at all times, including all outside business activities, change of address, and disclosure events. So here's some of the options, items, I should say, not options. So obviously we don't really worry about any of these with anybody here. With our office, the big thing will be address and phone number changes are the big things that we worry about. And OBAs. So I mentioned that earlier. So OBAs are supposed to be disclosed within a timely manner, and I would say one of the biggest follow-up items that we are catching on supervisory reviews are undisclosed OBAs. So I'm going to just give you an example of some of the things we're seeing. If you get your insurance licensed, whether you're selling insurance or not. Since we do not supervise your insurance, insurance is considered an OBA. So that needs to be disclosed. So keep that in mind. If you get your insurance license, you can reach out to me. Also, Cambridge would like that insurance license, so you can just reach out to me and I can help you and let you know what to do. If you become get a leadership position at a networking event, or you join a committee. So that's the second thing we have is someone joins a committee and they forget to tell us. So whatever the case may be, whatever type of committee. So if you're if you're not sure if it needs to be disclosed or not, please reach out to me and I will let you know. Because if these are not disclosed in a timely manner, they are a late filing, and I just don't want anybody to get fined for something because as you all know, FINRA doesn't care and that you can't use the excuse, oh, I didn't know any better. So just make sure that those are being kept up to date. And we do review them in your review, but obviously a year is a long time to have an undisclosed OBA. So please just keep an eye on that. And if you're not sure, just reach out. I'm happy to help you with that. And then here's some additional information in regards to um, U4 updates. If you do have a phone number or address change, reach out to me. I will let Cambridge know. Cambridge actually updates your U4, and then of course we will update our information here at Premier. So Reg Ed reminder. So anything reviewed prior to January 1st, 2022 requires resubmission if it's still in use and has not been reviewed in any updated submission since. So this, of course, includes all social media pages that are still in use. So we had this come up recently, so I thought I better bring this up to everyone. So typically, once you submit for approval, your website, without changes, I'm talking about if you don't make any changes, your website, your social media pages, so LinkedIn, Business Facebook, Instagram, YouTube. Once they're submitted, if there's no changes, you're done. You don't have to resubmit them again. But if they were submitted before January 2022, they're no longer in AdView, or they didn't transfer over from AdView to Reg Ed, and they need to be resubmitted. So if you're not sure, just go into Reg Ed and look. And if you don't see an approval for something and you look back to 2022 and it's not in there, then you should get it. You need to resubmit it if you're still using it. This, of course, does not apply to any content submitted through 20/10, Broadridge, FMG, advisor websites, or Market Central. So this is your own stuff that you do on your own. Marcio.
Yes. Hi, Christina. Thank you
Hi.
so much for covering this topic because I had a website that I launched in 2023. I got it approved then. I basically made no changes. And this time around, there are a number of edits and additional requests that definitely surprised me and will take some good amount of time to address. So I'm just curious why something that has been previously approved now they are asking questions. Something that even from my time with Francis Stoller, it
Mhm.
was fine. And then now they kind of, oh, you need to provide evidence of this and that. It seems like a little bit of an overkill, but so it just was wondering if you have any perspective on this.
Yeah, so as I went over with my FINRA stuff earlier, things change. FINRA changes the rules, SEC changes the rules. They tell us certain things that have to be disclosed, certain things have to be a certain way. So if stuff has to be updated, it's because Cambridge is aware that stuff needs to be changed. I know it's a hassle, but the one thing about our industry, it never stays the same, right? So, yeah, so something was approved before, and then they come back and say, oh, no, you can't do this anymore. It needs to be changed to this. It's because of some FINRA rule or SEC rule, something that has been updated and they want more clarification or they're err on the side of caution because as you read before, we don't want anybody to get in trouble. So that's why.
Yeah, yeah. I sense that maybe there was a lot of caution here
It could
on
be overkill too. I'll be honest. Sometimes they do overkill, but yeah.
Your perspective, kind of this came as a surprise, and we're busy with our businesses and our lives and everything. So, what is the expected timeline to make the edits and get this thing done?
Sure. So if it's active and live and clients can see it, it should be a priority.
Okay, yeah,
You know,
got it.
websites you can take offline while you're working on updating them, and then you have a lot more time. But if it's still active and live and anybody can access it, then you should get it fixed sooner than later. But
Okay.
if you can take it offline, then you can take your time.
No, yeah, no, I understand the priority. I'll coordinate with the advertising review to make sure we'll do. I have to clarify a few things, but I'm on it then. Okay,
Okay.
understood.
Okay. All right. So next, I want to go over a couple of hot topics. So just to remind everyone, the 2026-27 E&O insurance policy renewal is June 15th, so that's Monday. Reminder to have updated WISP, so the WISP and CSERP templates on file. Cambridge does have those. We do bring these up every year in our annual review with everyone. If you, some of you who haven't had your review yet, if you're not sure or you want to look at the templates, just let me know, and I can send you the link to Cambridge's page on that. It also has a continuity plan template in there as well, which is nice. Again, reminder to check trade review for trade warnings. Like I mentioned earlier, trade warnings are the biggest things that are on the enhanced supervision list for the enhanced supervision fee. Form CRS delivery documentation, just a reminder again, making sure that you're somewhere documenting it. However, whether you're uploading it with the new account paperwork, document it on the right bridge, document it in your CRM or your client file, wherever you're documenting it, just make sure you're documenting it. Documentation of annual meeting for managed accounts, just reminding that that's still important to do. So making sure that you have some sort of plan in place, whether a CRM reminder or whatever the case may be, that you're making sure that you're doing those annual meetings with your clients who are in managed accounts. For anybody who uses Yext / formerly known as Hearsay, max number of recipients increased from 40 to 100. So just wanted to let you all know that, anybody who uses that. There are technology support services that are available with Cambridge Source, so you all may not be aware of that. So I wanted to let you know Cambridge Source keeps adding more and more services that could be beneficial. I know a lot of, not a lot, but I know a handful of our advisors uses them for website management. So I can only imagine how much work a website could be. And they take care of everything. They take care of approvals, everything. If you need to change a disclosure or something, they can change it for you. So I just want to make sure you're all aware of that. Again, I wanted to say ask clients for trusted contact if they don't have one on file. I just think that's a good practice to have in place when you're meeting with your clients and they don't have one. To talk to them about adding one, or if they have one, make sure it's the right one, that they don't need it updated. SNA, so social networking attestation, needs to be on file for all social media outlets. That's what allows them to monitor your social media. So please make sure you have those on file. I do not have a way to check it. The only way we could check it is emailing Cambridge, but make sure you have it. If not, we can reach out for you and check, but just please make sure you have that on record. And then trade warnings for third-party money manager accounts. So I really try to catch when it's a third-party money manager account, but sometimes there's just not enough information in there and I just can't tell. And there's so many third-party money managers now that sometimes I can't always see that's what it is. So if I send you a trade warning back and it's for a third-party money manager account, literally respond back to me, that's what it is. There's a section on there, account notes, that I can add it in there. So anytime anything comes through for that specific client, I will see that and I can just put that in there and get that cleared out. So I try to catch stuff, but sometimes, I can have over 100 trade warnings, and I'm not exaggerating. Jen can confirm this, and so can Sebastian and Tracy for doing trade review. There could be hundreds in there some days, and sometimes I may miss that that's what it is. So just reply that back and I can clear it out and you won't get any more notifications for those. So remaining compliance calls. So the next one will be in Hershey in person, September 11th. So anybody who comes to Hershey will get to see that live in person. And then the one for the end of the year, normally it's in December, but there's a lot of stuff going on in December. So that one has been moved to November 19th. So I wanted to make sure everyone was aware of that. Resources available. So like I always like to do, besides the ones that had the links in the actual slide, here's links to everything that I talked about that's on Cambridge's source to give you more information if you want to talk to it. All these hyperlinks work for you. And that's it. So I know that was a lot that I just threw at you guys. Does anyone have any questions? Sarah.
Mute. Hi, I just wanted to ask for AI. We need to report Copilot, Claude, and ChatGPT for using all of them.
Yeah, there's procedures in place for them. So, what's your phone number and I'll call you offline.
516-599-2120.
Okay.
Extension
All right.
559, but
Okay, perfect. Yeah, there's no short answer to that, so I'll call you after the
Oh, okay. Okay, great. I just want to make sure.
Yeah, absolutely. Anyone else? All right. Well, thank you all for joining. If you do have any questions, please reach out. And then once this is approved with Cambridge, I will get this sent out to all of you in an email. Everyone enjoy the rest of your week. Oh, Randy, you have something? Or are you saying, oh, you're saying bye? All right. All right. Bye, everyone.
Go Knicks.
Go Spurs, go. Okay.